I'm going to go through a complete beginner's course on forex trading for some of you that want to learn how to start trading the forex market. The only thing I'm going to leave for this video is beginners related course, and trust me, after going through this course you will be very okay to start trading with your demo account. If it is your first time of seeing my YouTube channel, kindly hit the subscription button, like the video and drop your comment in the comment section so that others can see and learn what they want to learn. Alright, let's jump into what we have for the day. We start by defining forex. Forex stands for foreign exchange. Forex trading is the simultaneous buying of one currency and selling another. Currencies are traded through a broker or a dealer and are traded in pairs. For example, euro and US dollar, or the British pounds and Japanese yen. So now you need to understand that every single country in the world has their own currency, and that currency is the direct reflection of country's economy strength. So we need to trade in the market or buy. You need to trade when you trade in the forex market, you need to buy or sell a currency pair. For instance, an American traveling to Europe or a Nigerian traveling to Egypt and vice versa, there arises a need to change your currency to be able to operate financially in the other's economy. Okay, what does this thing mean? Just like if you travel from Nigeria to other countries as a Nigerian, because me, I'm a Nigerian. If you travel from Nigeria to other countries, you will not use naira to transact in that country because it's not their legal tender. So you need to carry out transaction in their countries, in their currency. You need to go to their exchange booth and exchange Nigerian naira to their country's currency. Probably you have traded forex there. You have traded forex when you travel to other countries. You don't need to use your country's currency to make a transaction there. You need to go to their exchange booth and get their own currency so that I can use it and trade. Or going to America, I will not use naira. I will have to get American dollar so that I can transact in their country, so thereby making their currency valuable to be strong, because demand makes the currency to be strong. I'm not saying that it's only exchanging countries currency will actually make a country's economy to be strong, our currency to be valuable, but it's one of them because there is a high demand of their currency. So now you need to know that forex is the largest market ever in existence, surpassing even the New York Stock Exchange market. Forex market is the biggest with a daily liquidity of $5.8 trillion. Imagine you as a forex trader taking out $1,000 out from this. Just zero your mind from that side and learn first. Zero your mind from that side. But I know forex market is the biggest market in the whole world. Even crypto market, futures market, equities, stock markets, all of them. Forex is the biggest market in the world. Just have it like that. History of forex. History has it that at the end of the World War II, the whole world was experiencing so much chaos such that the major Western government felt the need to create a system to stabilize the global economy known as Bretton Woods system. The agreement set the exchange rates of all currencies against gold. This singular act stabilized exchange rate for a while, but as the major economies of the world started to change and grow at different speeds, the rule of the system soon became obsolete and limiting. Now, what happened next? Soon enough, come 1971, the Bretton Woods Agreement was abolished and replaced by a different currency valuation system. With the United States in pilot seat, the currency market evolved to a free floating one where exchange rates were determined by supply and demand. At first, it was difficult to determine a fair exchange. Now, let me give you a practical illustration. Nigeria is a petrodollar country, that is country that exports crude oil. If the United States is coming to Nigeria to buy crude oil, they would they will definitely need naira to buy it because the United States dollar is not a legal tender in Nigeria. So that demand on naira will make naira to increase in value, and a dollar will eventually depreciate because your country have enough value that other countries are looking for. So naira will be in much demand. Now, is money traded in forex? Currency, that is money, and their derivatives are what is traded on the online forex platform. You are not buying anything physically, and this can make forex trading really confusing. So don't worry. When we discuss on how to place a trade, you will understand it more easier. Currency pairs. Currency symbols always have three letters. The first two letters identify the name of the country, while the third letters identifies the name of the country's currency. Take NZD for instance, New Zealand, uh, where NZ stand for New Zealand, while D stand for dollar. Easy enough, right? Here are major currencies pair in the forex market. All these major currencies pair are those ones that pair with the United States dollars. For instance, Euro USD, USD Japanese yen, GBP USD, USD Swiss francs, that is CHF, USD CAD, AUD USD, NZD USD. So all this arrangement and all this pair, yeah, people that made these things are ISO, International Standard Organization, are those ones that arrange this pair in this way. So they cannot come and start saying why is it that dollar is not first before GBP, for instance, or euro, or why is it that USD first before Japanese yen. People that made it this in this way are ISO, International Standard Organization. So for let's use Euro USD for example now. Euro now is the base, you call it a base, and USD you call it the quote. All right. So now euro, you buy in euro, and what do? You will sell in USD. Or let's take it that USD Japanese yen. USD now is the base currency, while Japanese yen is the quote. GBP base, USD quote. Just keep it like that. The first one is the base pair, the second one is the quote pair. And in this place now, you always buy in the base and you will sell in the quote. What do I mean? When euro is strong, that is when you will buy, and when dollar is stronger, you will sell. You understand me? When euro is strong, you will do what? You buy. And when euro is strong, dollar will be what? Will be weak. And when dollar is strong, euro will do what? You would be weak, right? So now you will buy when euro is strong, and you do what? You will sell when dollar is strong. Yes, you sell when dollar is strong. And when euro is strong and dollar is weak, what will you do? You will buy. And when dollar is weak and euro, when dollar is strong and euro is weak, what do? You will sell. That is it. You buy from the base and you sell from the quotes. Cross currency pairs are those currencies that do not pair with US dollar, but they pair with other currencies, like currency. Yeah, like let's take it for instance, euro now. Euro paired with GBP, CHF, CAD, Australian dollar, New Zealand, and Japanese yen. But remember, major currency pair, which I said are those pair that are those currency that pair with US dollars, but cross currency pairs paired with they do not pair with US dollar, but they pair with other currency. Exotic pairs are those pairs that are not heavily traded in the forex market. But for this one, as a beginner, newbie in the forex market, I would advise you that you should focus majorly on cross currency pairs and major currency pairs. But for exotic pairs, they are not heavily traded in the forex market because there are currencies that they are not valuable. Like even if you want to analyze where will you start safe, market will be doing anyhow. But there are all those exotic pairs. But for major currency pair and cross currency pair, you should focus majorly on that. Participants in the forex industry. There are the institutions who are also called the key players. Inside this institution, they have the interbanks, the large commercial companies, government and central banks. The second one is the retail traders or non-commercial traders. So now, there are reasons why the two major reasons why they trade forex. Number one is for profit reason and for non-profit reason. You understand? So for profit reason, I will tell you, as a retail trader like us, the interbanks and the high institution like the big companies are the ones that trade for profit reason. But for no profit reason is the central banks and the government. They only trade it to boost the economy of the country or nation. Who is a broker? A broker is a financial company that provides a platform where you can buy and sell your currency. You understand? The broker now they make a provision for you where you can fund your money and start trading in the forex market. So now, as a trader, it's not you are a retail trader. You don't control the market. So now broker serves as a middleman between you and the interbanks. Between you and the interbanks for you to have access in the forex market. A broker now will make a provision for the platform where you can fund your money and start trading in the forex market. 6 crucial things to consider when choosing a forex broker. Number one, security. As a beginner that is trying to learn forex trading, you need to consider security. Are they approved by the government? You get, because sometimes when you want to verify your account so that you want to create a brokerage platform where you can be funding your money and start trading, there are some brokers that won't request for national ID card, license, all those kind of things. But as a beginner, you need to consider all those things. Number two is transaction cost. When I started trading 2 years ago, I funded my first live account. That was around $30. Yes, $30. And this broker they collected $5. That remaining $25. You get, so a broker now do not supposed to charge you much when you want to fund your account. So you need to consider that. Or when you want to place a trade, before you know it, money to use and buy or sell any currency pair, that broker will start charging you much for that. No, you need to stay away from that kind of broker. It's not good. The third one is deposit and withdrawal. It should be a broker that when you deposit, anytime you want to have access to your money, they are always ready to to answer you guys. When you want to deposit, it's very very fast and reliable. Trading platform now, which is the fourth one. As a forex trader, you need to consider trading platform, which is MetaTrader 4, MetaTrader 5, and CTrader. These are the ones that I know. I don't use any of them again, exception of these three. So now, any broker now that you are using supposed to have this MetaTrader 4, MetaTrader 5, and CTrader. Execution. In this execution now, the broker that you are using should be very. If you want to place a trade, it should be a type that it won't delay your time. Sometimes your setup, when you want to place a trade, it will just go. Customer service, when you have a problem with your broker or you funded your money, anytime you call them they will answer you. These are the things that you need to consider as a forex trader before you start using that brokerage platform. Trading time and season. There are 4 major trading time and season in the forex market. We have Sydney season, Tokyo season, London season, and New York season. Sydney season starts from 9 p.m. and stop at 6 a.m. GMT. Tokyo opens at 12 a.m. and close at 8 a.m. London season start from 9 a.m. and stop at 12 p.m. and there always be an overlap between London season and New York season. So now New York season now starts at 1 p.m. and close at 9 p.m. So now for me as a trader, I would advise you to focus on London season and New York season GMT, because market is always volatile, and more especially at these overlap seasons. This overlap season now, the big investors are always open. Then that is when money will always be flowing. People that are making money will be making, and people that are losing will be losing. So focus majorly on London season and New York season. What is leverage? Leverage means borrowed funds. How does leverage works? Like I told you guys before, that leverage means a borrowed funds. So now you need to deposit 1% and they will give you 99%. You get? So now in leverage now, as a forex trader, you notice that before I told you who are the people that trade the forex market, I mentioned the interbanks, the institution, and other big, which is government and central banks. You get? So now you now as a retail trader, how much do you think you have to be having access to the forex market? You don't have anything. So now what they did is that they will leverage you, which is the borrowed funds, that is 99%, and let me just get this thing. They will leverage you 99% and 1% is yours. 1% is yours. This 1% here is yours. So now this 99% here is what they will give you as a borrowed fund, but you will not be seeing it. You will only be seeing the money that you deposited. Everything will be at the back end. Would you get? So now the leverage now might be 1:100, 1:1000, 1:2000, and some brokers sometimes offer unlimited. Some brokers offer unlimited. So leverage now means a borrowed fund as a forex trader. Some people might be wondering, how am I going to have access to leverage? Don't worry, your broker has got you covered. What is margin? Margin is simply a position of your funds that your forex broker sets aside from your account balance to keep your trade open. How does margin works? This is your account balance. This $10,000 is what you funded in your account, right? And you want to trade. The pair that you want to trade is GBP. For instance, GBP B, don't mind what I'm writing. GBP against USD. funny writing. Right. GBP, GBP, right. USD. So, right, your account balance is $10,000 and you want to trade. You saw a pair which is GBP USD. After analyzing your market, GBP USD, and discover that market is bullish, because when they say market is bullish, it's going up, and when they say market is bearish, it's coming down. These are the language that they use in the forex market: bullish and bearish. Bullish going up, bearish going down. which is buy or sell, or you use going long or shorting. You get? So don't worry, when you start going further into the forex industry, you will understand all this stuff. So your account balance is 10,000 USD, and you want to trade this pair. You want to buy because market is bullish. Market is bullish. Is bullish, right? So you reach this point, you want to enter a trade here, or you want to enter a trade here, which is going up. The amount that you use and buy GBP against US dollar at that point, because you are not going to use the whole $10,000 to buy it, there will be a specific amount that you are going to use and buy this GBP against USD, and that amount is what is called margin. Let's take it that at that point they are selling GBP $333, which is this one, $333. Your margin now is this $333, or you funded something like $500, $500, right? Your account balance is $500, right? So, and you saw that market is bearish, market is going down, and you want to sell, because when market is going down you will sell, you want to sell, right? So your margin, they say at that point, your the amount you are going to use and sell US dollar at that point, which is this US dollar, at that point is $10, right? So your margin is $10. Your margin is $10. The amount that you are going to use and buy or sell per at that point is what is called your margin. Equity means balance plus profit, or balance minus loss. Let's take for instance now, here now is balance, right? Here is your account balance, which is $1,000, right? So you enter the position. In that position you started running a profit of $100. So your equity now is $1,100, right? This is your equity. That is balance plus profit, the amount that you funded that is in your trading account, plus profit that you made at that trade for the meantime. For balance minus loss, let's say that you funded $1,000, which is in your trading account, and here you are on loss, which is $50, right? Your equity is $950. Balance minus loss, that is equity.